I'm Alison from FxScouts. Now, we all know that Forex trading is not easy, and in order to Forex trade effectively, you need to be able to read the market movements, you need to have a trading strategy, and you need to have some trading tools to help you improve your chances of becoming profitable. One of these tools is leverage. Now, through the correct use of leverage, without as much capital input, you can increase your chances of becoming profitable. But you can also increase your chances of losing your money. And in this video, I'm going to be covering what leverage is, how to effectively use leverage, and what trading strategies use what type of leverage. Leverage comes from your broker. The broker essentially offers a trader money to be able to hold a bigger position size without having to put in extra capital. So essentially, a trader can start with a very small trading account, but leverage a much larger position. Usually, leverage amounts vary upon the margin, and they come in forms such as 50 to 1, 100 to 1, 200 to 1, and up to 500 to 1. And the Forex market traditionally offers some of the highest levels of leverage in the industry. As we know, leverage has played a key role in the expansion of the Forex market. And more investors than ever are looking to the Forex market to make their capital go further. However, when looking at leverage, there's no one-size-fits-all approach to leverage. In order to understand real leverage, you need to divide the total transaction amount by the amount you have in your trading account. For example, if you have $10,000 in your account and you choose to open a $100,000 position, you are trading with 10 times leverage. So if you trade two standard lots, which is $200,000, instead of a single standard lot, which is $100,000, you are trading at 20 times leverage. So there are some very popular leverage trading strategies. So the first one is scalping. Now, scalping is a very popular trading strategy, and it often uses very high amounts of leverage. So those choosing to scalp use leverage of up to 1,000 to 1 or 3,000 to 1. And they open low spread trades on pairs, setting very small pip targets as a means to compensate for the high exposure level. Scalpers are also very careful with their risk management, and they set very tight take profits and stop losses to prevent huge losses of capital. The advantage that scalpers have over other trading methods is that they can wrap up their trades within minutes, if not seconds, which means that they can make relatively high returns in a much shorter period of time. Due to the large leverage, it isn't unheard of for scalpers to make up to 15 to 20% of their equity in one day. But scalpers have to deal with the extreme risk that comes with using such high levels of leverage. Day trading is another strategy, and it often requires traders to open and close their positions within the trading day. This means that they'll open their positions at the start of one of the trading sessions, typically the New York or the London trading sessions, and then they will close out their positions by the end of the day. Because they have limited opportunity to trade, or they don't allow their positions to go overnight, they often then use leverage to maximize their potential profits. Day trading also comes with significant risk because you're using leverage, but often with day trading, traders use slightly lower levels of leverage than they do with scalping. And many traders cap their leverage at 100 to 1, sometimes up to 200 to 1, depending on how much capital they have to risk, and also depending on how long they intend to keep their positions open. However, the level of leverage you use or you choose depends on your trading experience and also on your risk appetite. For new traders who are new to the market, a leverage level of 5 to 1 up to 10 to 1 might be sufficient. And for traders who have more trading experience and may have a bigger risk appetite, a leverage level of 50 to 1 or even up to 100 to 1 might be appropriate. But when you use leverage, again, just be very cautious with how you manage your risk and be very cautious with how much capital you put up when you're trading. A general rule of thumb is to risk 1 to 2% of your trading capital per trade and only 5% of your capital per trading day. So what are the advantages of using leverage? Well, the first thing, and probably the most obvious advantage, is that it allows a trader to open a much larger position with a smaller starting capital. So what are the disadvantages of using leverage? Well, by making use of leverage, you not only stand to increase your profits, but you also stand to greatly increase your losses. And the greater the amount of leverage you use, the greater the risk you take on. And what this means is that leverage is basically a double-edged sword. And a huge market shift could mean that you could blow your account in mere seconds. So just to give you an example of how leverage can affect your trades. So if a trader has acquired $1,000 and the price of the USD plummets by 50%, if the trader had not been invested in a leverage-based account, he would have strictly lost half of the funds, equating to $500. But if he had used leverage of 1 to 100, the picture becomes much bleaker, as the trader would lose all of his or her funds. So as you can see, leverage should not be taken lightly, and if you are to use leverage, please just again make sure that you manage your risk. So we always recommend using leveraged and unleveraged accounts on a demo account to figure out how leverage might affect your trades and whether or not leverage suits your trading strategy. So overall, using leverage can be very risky, but the statistics speak for themselves, and most traders use leverage because they understand how it can increase their profitability over the long term. But again, as we always say, ensure that you always trade first on a demo account, that you understand which levels of leverage you can use with your trading strategy, and ensure that you manage your risk by setting take profits and stop losses to prevent you losing too much money. Thank you for watching. If you have any questions, please send them through to us. Our website is FxScouts.com. And if you have any suggestions for any future videos, please pop them in the comment section below. And please remember to subscribe and like.